Nvidia is the last of the Mag 7 to report earnings for the first quarter, but investors will have to wait a bit. Nvidia is typically late in the earnings cycle and is not scheduled to release its results until May 28th. The stock is down 16% year to date, but still up 25% over the past 12 months. Time now for Options Corner. Joining us to take a deeper look at Nvidia, we've got Rick Ducat, the Duke of Data himself, lead market technician here on Schwab Network. All right, Rick, talk to us about the trends that you are noticing on the chart for Nvidia.
Outperforming both its technology sector and the broader market here. Nvidia is up about 30% during the past year, and that doesn't mean there hasn't been any volatility, because we can see that we were up as high as 153. We've come all the way back down to around 113 yesterday, 112 around this area of our red line, which was this low point here, high points here. That's about where we topped out yesterday. It also represents the confluence of our purple 252-day exponential moving average and our orange 63-day EMA. So quite a bit of technical factors lining up near that 113, 114 level. So we can see now, though, that RSI in yesterday's session started to push above that midline, as well as our longer-term downward sloping trend line in red there. So kind of an interesting mix here, because price did not really push above that resistance area here, but RSI is starting to break out. So we'll have to watch and see if price gets that needed push upward to try to resume this bullish trend amid our downward sloping channel that we've seen here.
All right. Thanks, Rick. We'll have to leave that there on the analysis on the chart. Time to take us through an example trade. We've got Tom White, senior options contributor and co-host of Fast Market. All right, Tom. So how would you structure an example trade for Nvidia? We've got a long road ahead of us in terms of waiting for earnings from it.
Yeah, as you mentioned, earnings on the 28th. So I kind of wanted to look at a strategy that avoids that earnings event, but takes advantage of maybe some consolidation here. As you mentioned, the stock's still in bear market territory from those early January all-time highs above 153 bucks a share. So I looked at something that's neutral to bullish with a little bit of kicker if the stock does pull back here. So I looked at a back ratio where I'm going to buy a 1-by-2 ratio spread here, basically in the May 23rd weekly cycle. So 3 weeks to expiration. So I've got some time on this type of position, but it's kind of a twofold type of strategy where, hey, if the stock goes higher or stays right here, I'm going to still profit. It can even go lower. I can even profit. But you just don't want it to sell off, or maybe you do want it to sell off. So let's run through this strategy. Back ratio, where we're going to buy in that May 23rd weekly cycle, we're going to buy one of the 110 strike puts, and then we're going to sell two of the 108 strike puts. So there's that 1-by-2 ratio on this. You're going to collect, if the stock opens up here around 113, you're going to collect about a 220 credit on it. Now, 220 credit, that means anything above the 110 strike, all you do is get to keep that option, or that option premium that you collected, $220 per spread that you do on this type of trade. Now, if I collect 220 credit, where does it take my break even to where I start to lose money? That's all the way down at or near the 103 level, 103.80 level is where our break even is going to be. So you've got that big cushion to the downside, but because you're doing a 1-by-2, you get a little kicker at or near that short 108 strike where you can actually max out your profitability on this. Now, you're short a naked put in this type of strategy. You bought one of the 110 puts, sold two of the 108 puts, so you're short a naked put. So you've got to be comfortable if the stock does fall below the 108 level that, hey, I'm willing to buy the shares. If you continue to hold those two short puts, I'm willing to buy the shares at that break even of 103.8. So big cushion to the downside, but this might be that strategy that works for people if, hey, I can deal with the near-term volatility. Even if the stock pulls back, I'm comfortable because I can still profit. And, hey, I'm comfortable owning the shares if it continues to fall, because that 103.80 level is about 10 bucks below the current share price in Nvidia.
Okay. And then does that take into account any, kind of shift in terms of overall market sentiment?
It does. I mean, Nvidia's not immune to any market moves as far as macro moves that we're going to see. But the S&P 500, we're shooting for 9 straight days in a row. We're up again after that jobs data. So you have to take that into consideration. I think one of the key things with this, you avoid that earnings event, which might be either, to the upside or downside. But you got to be comfortable owning the shares at these levels, at the just under 104 level.
All right. That's an example trade on Nvidia. It's got earnings at the end of the month. Thank you, Tom.